Hello, trading has closed on June 12th, 2024. We always start with our disclaimer, go over our calls, and then make our predictions. It's my trading plan for June 13th, 2024. Remember, my calls can be wrong. Trade at your own risk. Also have personal business tomorrow morning. Probably won't even be able to look at the market all day, and doubt I'll make any trades. If you're going to risk your own money, bear in mind that I'm not going to be risking mine because I won't be around. Look for the pattern with the early high, which is this, and tomorrow also has the early high. We had a great plan for gapping down, and I said we had the perfect setup for gapping down, and the only thing that would kill it would be to gap sharply in the undesired direction. So if we gapped up sharply, that kills the call before the open. Here's what we said here, obviously from context, even though I said gap down, it should have read gap up. And I said here if I was wrong about the idea, it should be clear before the open. We also said we had the CPI report and the FOMC announcement report. When these reports come out, I just can't predict how the market's going to respond to them. There was a favorable response to the CPI report because it looks like interest rates it looks like inflation is cooling down, but I don't have any way of predicting that. And tomorrow there's a producer price index, and I don't have a great way of predicting the response to that report either. So the call is going to be less accurate than I would like. During the day, MEJT said this blip up was false, said this drop was false. They've already retraced. We have our typical three-leg Fed whipsaw. Down, up, down, each leg bigger than the last. That's played out. First leg was down. That means the next move of consequence should be down, but it doesn't mean we drop tomorrow, and it doesn't mean we can't have a detour higher first. It just means lower prices should be coming. We've been talking about this trend line. It finally broke through by gapping over it. That's a valid break. Needs confirmation by trading past today's close by 1 cent tomorrow, but if it does, it should have more to come on the upside, even though the FOMC announcement says we're going to have a move lower at some point. That's what the MEJT target from yesterday says. When we gapped up, the time was off the table, but not the price. We should see 53, 54.30 at some point. Just doesn't have to be anytime soon. Thursday's pattern has the early high regardless of where we open. Typically it's a bearish day with a low in the final hour, but if it's strong, you should see more strength in days to come. PPI report, producer price index, comes out before tomorrow's open. Just like today, I can't predict the market's response to major economic reports with a sufficient degree of accuracy. I have personal business tomorrow. Probably won't even be able to look at the market all day. Shorter term, we have a number of negative signs. We gapped up, hit a higher high, but closed under intraday highs. And if, that's an if, maintained at the open, should lead to lower prices even if we don't close lower. First move after FOMC announcement was lower. It usually means the next move of consequence will be down, even if we don't close down tomorrow. Those need to gap and promptly overtake today's high to continue the rally unabated. And futures are up as I'm writing this, so it's entirely possible that that happens. Don't forget we have that economic report coming out. Intermediate term, we've cleared a major resistance level, and no matter how low we drop, if we drop at all, I think price is going to recover and set new all-time highs before the market's done with this. So it's the pattern with the early high. Usually it's a negative day. Shorter term, it's a negative pattern unless we gap and take this high out early, which is entirely possible with the economic report coming out tomorrow and the PPI and futures up as I'm recording this. So you can't rule that out. Tomorrow's open can substitute for today's close. So look for the pattern with the early high, and that's today's call.